Welcome to the Real Estate Espresso Podcast, your morning shot of what's new in the world of real estate investing. I'm your host, Victor Menashe. On today's show, we're talking about getting products from A to B, and that's always been an issue for anyone in business. It used to be the case that you had to buy products through a specific channel. In the good old days, stores like Sears, Kmart, Walmart, and Bloomingdales were the channels of choice. Today, businesses all over are taking advantage of new channels that didn't exist a few years ago. Some of them have achieved market dominance. For home furnishings, Direct Buy and Wayfair are growing quickly. The auto-based company Shopify is also playing an important role in the transition from bricks and mortar retail to the e-commerce economy. Shopify now hosts more than 1 million e-commerce stores on its platform. And while Amazon is the largest channel for e-commerce, it charges a hefty premium for retailers who can often double their net profit margins if they sold the same item and shipped through their own channel. Last week, commercial brokerage house JLL gave its update and guidance for the industrial sector for Q3 of 2021. Despite significant growth in capacity over the last 2 years, we're seeing solid absorption across most major markets. What stands out is that some cities have grown disproportionately compared with their industrial sector. Part of this is due to allocation of land for industrial use or lack thereof. After analyzing all of the data across multiple different cities, the number one market that, in my view, has industrial growth potential is Austin, Texas. The city only has 60 million square feet of industrial space. That compares with 695 million square feet in Dallas-Fort Worth and 482 million square feet in nearby Houston. Even Nashville, Tennessee, which is half the size of Austin, has more than 3 times the industrial space on an absolute basis and 6 times more industrial space on a per capita basis. In Q3, 137.9 million square feet of industrial space were leased nationwide. That's a new high for 2021. And the rental rates have increased as well in the past quarter to an average of $6.76 per square foot. Since the third quarter of 2020, rents have increased 7.1%. Net absorption was the highest on record, with over 135 million square feet absorbed, and the industrial market hit its lowest vacancy on record at 4.3%. The market delivered 85 million new square feet of industrial space in Q3. 69.6% of that was already pre-leased. A significant source of demand has been last-mile logistics. These facilities are typically small to medium-sized facilities, and they're located close to freeways and transportation hubs in major cities. In many ways, the pandemic accelerated a trend that was already underway by nearly a decade. The question becomes, will the current rate of growth in market demand over the past 2 years continue over the next 2 years and beyond? Will new supply eventually saturate the market and require time to catch up to demand? There's always a risk that supply and demand get ahead of each other in a seesaw sort of effect. Historically, a good percentage of industrial space has been built on spec, unless there's a very specific customer. Somewhere between 45% to 55% of industrial space is typically pre-leased, and in the last quarter, 69.6% of newly constructed space was pre-leased, indicating absorption is extremely high. The big question is, once you have all this space in the last mile, will you actually be able to find the transportation required to meet the demand for deliveries? We've seen that local delivery market has a huge amount of turnover. This is unskilled work, and there's a community pushback to delivery hubs located close to residential areas. It's a bit of a paradox because people want quick delivery, but they don't like the increased traffic, the increased noise, the diesel fumes associated with delivery vehicles that tend to leave their engines idling during deliveries. In my opinion, there's a significant land play for those who are looking to develop industrial space. Short-term uses for industrial land that can effectively land bank by creating surface storage products like boat and RV storage can be a very effective strategy. We're actively playing in this space in select markets with a growing population where the amount of industrial space is significantly below the traditional supply metrics. Some locations in Central Florida are experiencing this kind of growth, and we see potential for further growth in the sector. Many locations in Florida saw considerable rent growth in the third quarter. Rents in Tampa were up 7.7%, Broward County up 6.9%, and rents in Miami-Dade County were up a stunning 16.5%. Industrial investing is a hyper-local phenomenon, and it's tied tightly to manufacturing and logistics. There's been good activity in the past year with sale-leaseback opportunities for manufacturers that are looking to move more cash onto their balance sheets. But investors in this space should also be aware of rising interest rates in the future. Make sure that their leverage and profitability is protected. Industrial flex space that can be easily subdivided or reassembled into secure, separately accessible spaces is definitely being sought after right now. And again, I'll point to Austin, Texas as a leader in the market, at least a leader in terms of opportunity. And while Austin only absorbed 5.8 million square feet of new space as compared with over 30 million square feet in eastern Pennsylvania or 27 million square feet in Dallas, that 5.8 million square feet in Austin represents a growth of nearly 10% in a single year for the entire market. That's a huge amount of growth. And much of that was initiated by the new Tesla facility, but we've seen the recent announcement of new logistics center for Lowe's in the south end of the city and the new Samsung semiconductor fab up in the north. All of these major investments will create spin-off demand for new space. As you think about that, take a closer look at industrial opportunities. Have an awesome rest of your day. Go make some great things happen. We'll talk to you again tomorrow.